Hey, traders, welcome to Charts and Coffee. Happy Friday, everybody. Happy PCE Friday. You see, I've got the calendar up on the screen to kick off the show, and we are dealing with the aftermath of an economic event that I would say is probably on par with non-farm payroll, maybe in some ways even more important. It doesn't mean that it's always going to kick off a lot of volatility or even direction, but it's definitely a hot zone that we need to keep an eye on. Notice that the PCE came in line and a tick higher than previous. The way to measure this, we've talked about this, is, why do we look at jobs? Why do we look at inflation? Why do we look at growth? The only reason we actually care about these things is, in this environment, what does it mean to the Federal Reserve? And the easiest way to measure that is to simply head on over to the CME FedWatch tool. This is a graph that studies the price action on numerous contracts of the Fed Fund futures contract. And it gives us an idea of what we traders are expecting, investors are expecting the Federal Reserve to do and when. The most important months continue to be March and May, where we reach that 4.75 to 5% target rate probability. It is pretty much at this point baked into the cake, fully discounted, really, that we're going to see that target rate probability reach at least 4.75 to 5%. The uncertainty remains going into May or even into June, which is, are we going to see one more arguably pesky rate hike, one more quarter point hike to 5 to 5.25? Know that equities, treasuries, gold, currencies, they've discounted, these contracts have discounted this particular potential before. It's not a shock to the system. It's only going to be a bit of an adjustment to realign to 5 to 5.25 from the 4.75 to 5%. These are two very, very common expectations for where the target rates are going to be. A surprise would be down at 4.5 to 4.75. A surprise, a shock would be 5.25 to 5.5%. This is the way we're going to measure it. This has been working very, very well. And this is what we know. We trade what we see. We don't speculate on what could happen. We just basically place trades on what the expectations are right now. And those are the expectations after the PCE. All right, so that brings us to your question. So let's bring up the charts here and take a look at what we've got. And we will kick it off with, all right, let's see what we've got here. All right, kick it off with Praveen, who asked, I have changed the anchored, yes, anchored VWAPs. We absolutely use anchored VWAPs in the mastery. Anchored VWAPs I use in the futures room to Jan 3rd. That's fine. We had Jan 3rd, 2022. Jan 3rd, 2023 is absolutely where, yeah, at this point, I'm fine with that. Do I need to change for the weekly setup? I'll let everybody know in the Sector Secrets Mastery or the futures when I do that, but I have not updated that at all yet. All right, next up is Jack, who asks, currently the daily indices are neutral on the multi-trend. Let's jump on over there. So multi-trend, neutral, that's correct. Bullish momentum. The overbought slow stow, yes. And resistance at the V-score. There we go. And also, yes. I'm taking a look at the S&P, right? So we want to, Jack, and I know you know this, but for everybody, we need to look at each index for its own read on these different indicators. What are my thoughts? My main thought isn't so I love that you're looking at the daily and you're looking at the reads and you're looking at the resistance and the current mark. I mean, that the structure, making that first. Love it, Jack. Love it. My idea has been, and it's something that we've talked about now in a couple of free videos. My thought is, do I really need to focus? Must I focus on the daily per se? Is that something I have to do? Or can I adjust and say, you know what? Where are the opportunities on the 1 hour? So my adjustment isn't in necessarily philosophy, in terms of what a setup is. It's on a shift in structure dictates strategy. It's actually a shift in interval. Is there an opportunity on the 1 hour to trade, not as a day trader, but to trade more as a trader that's nimble with, say, a 1 to 3 day time horizon? And that's the way right now, Jack, that's the way I'm adapting. I don't want to be short the indices on the daily time frame. I may not mind to be short or long on the indices on a 1 hour. And I know that day trading a 5 minute chart isn't always something that is desirable by a broad group of traders. It is popular amongst traders who have the luxury of day trading, right? But a lot of folks, frankly, gang, are going back to work. They're going back to normal schedules. Here we are a couple of years past the pandemic, and you know the access that a lot of traders had to trade a 5 minute chart isn't there. And then what's really interesting is the 5 minute chart isn't always going to be the one that's going to give us the best clarity. Neither is the daily. So the ability to shift to a 1 hour does a couple of things. One, keeps us more nimble than the daily. Two, we're not having to babysit and be as active as we may be on a 5 minute. The 1 hour is a really cool middle ground for traders who want to be engaged with the market, want to have a nimble time horizon, but don't necessarily trust the action on the daily, don't want to day trade, but they want to be able to manage positions with other things going on in their life. And so, Jack, I'm finding for any number of reasons, both personally and then as a mentor, that 1 hour is checking a lot of boxes. So that's where I would shift to your point about the daily, yes, let's be aware of some, at least a stall for now. At least a stall for now. And then a stall could then lead to a potential retracement. But I'm not sure that that's where I'm going to trade it on the daily. I'm going to see if we can't find a setup on the 1 hour, which will give me that 1 to 3 day potential time horizon. Thanks for the question, Jack. Good stuff. Kay asked, ABT, green in the wave. Let's jump on over there. 2 days after earnings. Absolutely love that we're past that volatility window for earnings. We're trading at about 110. So we're going to open up back lower in the wave today around what, 110.69, 110.65. Um, it could be a buy. Yeah, this could be a nice buy setup. Green trend means buy the dip or mean reversion is going to be terrific within that 34 EMA wave. Yeah, Kay, I like that a lot. That might be one that we will talk a little bit more about in coming days, and we will definitely say to ourselves, hey, what are we seeing within the XLV? What else is looking bullish? What else is looking like a potential buy within the XLV? TMO, well, let me show you. Let me move this up a little bit. So TMO looks very interesting. Abbott looks very interesting. And Abbott's clearly far more affordable. So I love what you're looking at there. Absolutely. Like that one a lot. Yeah, good eye. I think it's time to look for some long calls within that move back into the wave. Sure. All right, Stacy, happy Friday. Hit that like on your way out the door. Don't head out yet, but absolutely. I appreciate that, Stacy. Thank you very much. President of my fan club, Stacy is. I love it. All right, thank you. Next up, Mr. Walker. How are you doing, my friend? Slow stow is used in a green, yellow, 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 and red, yellow. Emphasis, yes, on the trend on the lower row of the multi or the second trade flag, the trend trade flag. Yes, it's got to be in chop. I'm not as concerned about the momentum, bearish, bullish, neutral, but that trend must be dominantly neutral. And even when we have short transitions into a green or red trend on the multi, If it doesn't last more than 2 sessions, we're still neutral. So the simple answer is absolutely. You got it. You got it. All right. So ultimately, remember that why do we use a slow stow? For those of you who are wondering, why would I use a slow stow, Rog? Why is it sitting at the bottom of your screen? Because it's going to give us highs, right? Highs and lows. It's going to give us overbought, right? And oversold levels. And when used in conjunction with the Darvis, which is part of the TOPS system, when used in conjunction with the Darvis, you've got a very, very powerful set of tools for sideways range bound markets. If you're not familiar with this, if you're thinking, Rog, I'm not sure what this top system is, or I've downloaded the free version of Tops and I want to have a better idea of what it is I'm supposed to do with it, check out Countdown Trader for the next about 3 weeks. We're going to be going through a very detailed process of what Tops is, what are the tools within it, what are they measuring, why do we care, how do I use it? Check out countdowntrader.com. Trisha's putting together an amazing series on tops. We've had a lot of questions, a lot of demand about, hey, Rog, I've got this indicator. I'm aware of these tools, but what do I do with them, right? It's one thing to have an indicator, and I'm happy to give a lot of tools away for free. But then the trick is, now what do I do with it, right? What do I do with this pretty color-coded candle? So check that out over at countdowntrader.com. All right. Next up is, let's see here. Samir asks, what are the new bands displayed on my charts? Are they HPMRs? The new the new zones? Sure. You're talking about the yellow and white zones. Those are DPMRs. So Samir, two very different tools. So again, yes, HPMR versus DPMR. Very similar in that chocolate ice cream and vanilla ice cream or ice cream, but they really couldn't be any more different, right? And so HPMRs are hourly price movement ranges, ideal for time frames that are far shorter in nature, 2 minute, 5 minute, 15 minute, 30 minute, right? Shorter time frames. The DPMRs are for slightly longer time frames, slightly longer time horizons, 1 hour, 4 hour, daily, right? So very similar philosophically. They're both ice cream in that regard, but they're very different in how they're measuring and what they're measuring, and ultimately the zones that they plot. So they're both time and volatility based, but ultimately why they're plotting where they're plotting is drastically different, and the application is drastically different in terms of time frame and time horizon. So, you use the wrong one on the wrong interval, it's going to set you up for zones that are probably not applicable. And that's why we have them both. And that's why we have them both. So thanks for the question. All right, Tim asks, is there a new HPMR that better reflects the hourly chart? What is the date to look for in the new HPMR? So it's a DPMR, Tim. It's a daily price movement range. It's a completely different curation of time. It's a completely different breakdown of what we're plotting as time-based, volatility-based support and resistance. So for 5-minute charts, for 15-minute charts, for 30-minute charts, use the HPMRs. You're going to notice those HPMRs are not going anywhere, right? These things are absolutely on that 5-minute, on that 2-minute time frame for me. That's that day trading, flat by the end of the day setup, right? But what about traders who don't want to be flat by the end of the day? What about traders who don't necessarily want to be day trading? So those are DPMRs. And what's going to better reflect the hourly or even the daily? Tim, that's the DPMR. Yes, that's the DPMR. All right. Do I use extended hours? Yes. LM fan, I do. I use extended hours for, if I can check the box for extended hours on my platform, whatever it may be. The two that I use, and I only use two, Thinkorswim and TradingView. If I can go over to equities and show extended, absolutely yes. Absolutely yes. Thank you for the question. That makes a big difference to me. I do want to see what the pre-market action is like, and I do absolutely want those extended hours on my futures, which really isn't extended hours. It isn't. Um, I think a lot of traders think, well, anything outside 9:30 to 4 is extended hours. For equities in the US, yes, no doubt. But for futures, no, futures are a global market. They're a global phenomenon. It's global risk appetite and risk aversion. So great question. Thank you very much. All right. Next up. Hey there, Cynthia. I mentioned that I update ETF flex grids every 10 to 14 days. Yeah, about that. About that. What site do I use to get equity weights? etfdb.com. There's a number of places that we can go for weighting, stocks weighted in their indices and sectors. I just happen to love the ETFDB website. All right, next up, thoughts on Nike. Yeah, Robert, I do. I do have thoughts on Nike. This is something we talked about a bit in the mastery. And the thought was if we crack open the XLY, a couple important things have happened. I've mentioned now for quite a few months, please don't be aggressive to the short side in this environment where we are expecting the Federal Reserve to peak, pause, and by late Q4, maybe early Q1 of 2024, we're going to start to see cuts because we're going to be at 5%, give or take a quarter by the time we get to June, presumably maybe May or March. Because that bazooka the Federal Reserve has to cut rates is now reloaded, if you will. If there is any kind of recession issue, right? Now we have sort of a weapon, a defense against it. And that's why I've been saying, hey, let's not. Sure. Why do I bring that up with Nike? Because Amazon and Tesla have been some of the weakest names in the market. And I said, I know they're weak, but they're moving to a neutral environment. So rather than thinking overbought shorts, let's put the short side of the equity markets and the indices on the back burner and let's start looking at how we can get long. Let's start trying to find green trends, trends that are already on their way higher. You'll see Nike, Starbucks, TJ Maxx. Yes, I like an opportunity for a buy the dip, right? A mean reversion, a retracement, however you want to look at it. Absolutely. But those are the three symbols within XLY. Amazon and Tesla are off their back. It's off the XLY's back right now for the most part. And I think it's going to be easier to get bullish. Okay. What is my suggestion for snow? I don't have a position here, Jay, but I'm happy to talk about it. What is my suggestion? I can't say there's much I really like here, quite frankly. My suggestion is find, and I mean this sincerely, Jay. My suggestion is find something different, find something better, find something with better clarity, a better range, preferably above the 200 propulsion. In the meanwhile, it is overbought on the slow stochastic. All right, Red Dragon says we've got a 5-minute pullback on gold to the 200. Yeah, when the 200 is in play, remember we can't extract the indicators from structure. And you mentioned the 205-minute. All right, let's see what we got here. Yeah, interesting. So if we have an oversold stochastic, if we have an uptrend at a level like that, it is useful. It would be bullish. Yeah, it would be bullish. Red Dragon, sure. Ian, good morning. I was curious when I take HPMR trades, where do I set the stop loss and the first profit target? So, Ian, we talked about this a lot in the day trading room. We use the volatility. Use the volatility of the zones to dictate where the stop loss is. So the zone itself is part of the stop loss process. And then the area between the zones, I don't expect them to go from one end to the other. The area between the zones is where we start to consider the initial target. All right. And remember, gang, so when we're in the mastery, when I'm in the Sector Secrets mastery and we're day trading, and by the way, gang, I'm only in 2 rooms really for the most part. Wednesdays, I'm in the options room. Tuesdays, Thursdays, and Fridays, I'm in the simpler futures room. And then 5 days a week, I'm in the Sector Secrets Mastery Room. So you might catch me in other places, but that's my main schedule. So when I am looking at different setups, right? And I think this SPX question is a great place to wrap up and sort of focus on that. So for a 5 minute wave trend, do I use ES? Yeah, I'm going to use ES. Absolutely. I don't trade the SPX. I know it's incredibly popular right now. Everyone's sort of in love with these zero dated options, and that's cool. That's cool. But here's the thing: if you can trade ES, you can trade SPX. The main thing is, what's that more 24-hour liquid market that represents what's going on in the S&P? It's the ES futures. Then if I want to take that to the SPY, to the micro S&P, or of course to the SPX, where we do have our complement of tools, whether that be the HPMRs or whether that be the DPMRs. At that point, I can make a decision about, well, for example, here, this corresponds with a buy that we did in the NASDAQ, right? The NQ futures via the QQQ, via the Qs. You can see the SPX did something very, very similar, right? So yeah, I would focus on ES. And then if the ES enters a zone that you're interested in, you can consider ES, MES, SPX, SPY, but I would recommend sticking with the ES. Or, if you want to look at the SPX, we do have our volatility tools for that symbol as well. But for market structure, personally, I'm going to stick with the ES. But I'll tell you, ES and SPX are usually going to look pretty darn similar. All right. Hope that makes sense. Thank you as always. And thank you so much. Grateful for, thank you so much, Ann. I appreciate your time. Grateful for that as well. Gang, have a great Friday. I will see you on Sunday for the Raghee Report, 6 p.m. And in the meanwhile, if you have any questions, if you're looking for a little bit more information on some of these indicators that I am talking about, check out countdowntrader.com. Free resource, amazing updates there. All right, gang, be good to each other. I'll talk with you soon.